A special thank you to each of our subscribers who make this channel possible. Here's today's story. In a recent interview on CBS News, Face the Nation, business analyst Jill Schlesinger provided critical insights into the economic landscape as it relates to tariffs, consumer behavior, and the overall health of the economy. With the backdrop of ongoing negotiations and potential tariff implementations, Schlesinger discussed how these factors could influence both retailers and consumers. She noted that while some retailers are using the threat of tariffs as a marketing strategy to encourage purchases, the reality is more complex. Tariffs, which are fees imposed on imported goods, create a dilemma for U.S. companies. They must decide whether to absorb these costs, which could impact their profits, or pass them on to consumers, potentially leading to higher prices. Given the recent history of inflation, where prices surged to a 40-year high, consumers are understandably anxious about any further increases in the cost of goods. Schlesinger emphasized that the current economic climate is markedly different from previous years, particularly during the first Trump administration when inflation was low. Today, many Americans are already feeling the strain of elevated prices, making them less likely to accept additional costs from tariffs. This creates a precarious situation for businesses that are uncertain about how consumers will react. Looking ahead, Schlesinger raised concerns about the potential for a deeper tariff story under a second Trump administration. The uncertainty surrounding the specifics of these tariffs adds to the anxiety among economists and consumers alike. The labor market, which has shown substantial growth, remains a bright spot in the economy. Schlesinger pointed out that the U.S. has emerged from the COVID-19 pandemic in a stronger position than many other developed nations, with growth in sectors such as technology and AI. However, the looming threats of tariffs and the potential extension of tax cuts from the previous administration could create instability in the financial markets. Investors are wary of how these factors might play out in the long term, especially as the economy continues to recover from the pandemic's impact. The stock market has seen positive trends since the recent elections, but Schlesinger cautioned that this could be a temporary reaction based on initial investor optimism. She reminded viewers that market fluctuations are inevitable and advised individual investors to stick to their long-term strategies rather than reacting to short-term market changes. As the discussion shifted to historical perspectives, historian H.W. Brands joined the conversation to draw parallels between past debates over America's role in the world and current sentiments surrounding nationalism and isolationism. Brands highlighted the historical significance of figures like Charles Lindbergh during World War II, who became a polarizing figure in the debate over whether the U.S. should intervene in global conflicts. This historical context raises important questions about America's current foreign policy stance and its implications for international relations. The ongoing dialogue about tariffs and economic behavior serves as a reminder of the interconnectedness of domestic policies and global markets. As consumers and businesses navigate these challenges, the potential for market shifts remains a pressing concern for analysts and investors alike. The insights shared by Schlesinger and Brands underscore the importance of remaining informed and adaptable in an ever-evolving economic landscape. That's all for this story. We upload videos every day covering many different subjects, so hit that subscribe button to stay informed. Thanks for watching.